Hello. Welcome everyone, guys. After a long time, I'm making a video. So I will make this video count and make it as informative and as valuable for you as possible. So first of all, I would like to thank you all for all the reach that I'm getting on all my socials. In my YouTube, I am above 100 subscribers. In my Telegram, I have good amount of subscribers. In my Twitter also, the followers are increasing. Thank you so much for your love and support. Now let's start with today's agenda. Trading FX pairs, top-down approach. So what do I mean by this? Like, see, there is a very major issue when you are going to trade FX pairs, Forex pairs. When you trade Forex pairs, you have multiple options in front of you. You have n number of pairs. There is no limit of the Forex pairs available that are in the market. You can trade up to 50 markets in FX pairs. So your bias, your focus should be very centered when you are trading FX pairs, which means that in the beginning of the week itself, you should know that in this upcoming week, what I am going to trade and how I am going to trade. All these concepts, how to trade, how to enter, where to book, will be covered in this video in a detailed manner. You will not need any other video, any other model. I bet you guys, you don't need any other model than this. It's very simple set of rules. Anyone can follow this who has a basic idea about ICT. So let's start the main content. Hold on. Yep. So first of all, overview. In this video, I will share with you an extremely simple and repeatable trading setup that keeps forming each and every week. This setup is perfect to avoid overtrading and taking quality trades. This is the main thing. Overtrading is the major issue in FX pairs, and taking quality trades, you should focus on them. Okay, weekly planning. The first aspect is weekly planning. Now, for weekly planning, whenever you are entering in a new week in a market, you should have a clear idea that what I am going to anticipate in the upcoming week. If you are not able to anticipate what's going to happen in the upcoming week, just take a brief note of what nearest POIs we have, what weekly POIs, what daily POIs are present close to us, and what are the news, what is the economic calendar, what the economic calendar is saying, on which day major news is coming. So on that day, if price goes into that POI, you can be more aware. For all these weekly planning, I will suggest you one and only one thing. My weekly outlook videos, which I will post at the beginning of every week, go watch them. Also, if you want to make your concepts clear, go watch the previous weekly outlook videos, how I make my predictions, how I make my bias. So that's very important, guys. Taking the weekly outlook videos, the weekly outlook and the economic calendar for planning. You can rely on my videos for that. Okay, let's go ahead. Time frame alignment. Now, time frame alignment is extremely important when you are trading this setup. And for time frame alignment, out there you will find multiple time frame alignment, monthly, daily, etc. Monthly, what I don't know, even like what they go deep into it. Monthly, daily, 1 hour, 4 hour, M15, and etc. But we will not go so much deep into this. We will go what is necessary, as we are day traders or a semi-swing traders, which means that we can hold the trade for 1 or 2 days at maximum. Best if we can book a trade in the current session or the next session. Now, my time frame alignment, which I like, is daily, H1, M5. Daily means when price taps a daily key level, I drop down to the hourly time frame, wait for market structure shift, and breaker block confirmation, and or an SMT. Then I go down to the 5-minute time frame for framing my entry. Time. See, this is the major thing, guys. Very important. You can learn this whole model, but you will take multiple SL if you don't follow this rule, which is of time. You have to look for entries only in 2 specific time, which is the London session. London session also, you have to look for entries between 2:45 a.m. to 4:45 a.m. Eastern Standard Time. Not before that, not after that. I don't care what the market does in the times other than this. As simple as that. For the NY session, the time is 7 a.m. Eastern Standard Time to 11:30 a.m. Eastern Standard Time, which is what we call the New York AM session. Quite simple. These two times, guys, just engrave these two times when you are trading FX pairs and using my setup. Don't even look at the charts. Don't even look at the FX pairs except these times. Okay, I will leave these up to you. It's a very strict rule to follow because it's very it's very, what do we say, it attracts you that, oh yes, I'm forming a setup, come to me. But if you don't follow this rule and you take SLs, then it's no wonder. All right, I will also give you examples where you get stopped out because of trading in the wrong time zone. Now let's drop down to the example. All right, first of all, we will have example 1. Example 1 is an AUDUSD. So first of all, we will have a look at the daily chart. The daily chart has taken out an external range liquidity right here. So our immediate target goes down to this internal range liquidity, this daily FVG and this daily order block. This down close candle right here is a daily order block. So my plan is bearish, and after I get a daily key level. So you can see this FVG, this daily FVG, it is getting respected since a long time. Also, we have a stop hunt. So what I am planning is, we have a stop hunt. We are in a daily POI. Now I will drop down to the hourly time frame. This is the hourly time frame of AUDUSD. On the hourly time frame, I need a market structure shift. Alright, so you can see that market was just in slow buying, and here we made a low, we made a higher high, and we closed below the low. This was the AUD news which I traded. I have also shared it in my Twitter and Telegram. This candle right here is the AUD news which I traded. After getting closing below this low, our breaker block is confirmed. Now, what a breaker block is. Now, see, there are many misconceptions about breaker block. I also know, I may not be right, but yes, I followed this and this suits me well. Now, a breaker block, according to me, is not just one, like the one candle, the lowest candle. No, it's not a breaker for me. A breaker for me is a series of candle or a complete order flow. For example, if I am looking for bearish breaker, then the selling move which came before the final stop hunt. The selling move which came before the final stop hunt is my breaker. Now you can see this candle was an open high. So from here, a selling move started all the way till this low. All this internal price action is an internal range of this range. So I'm not interested in taking breaker blocks in this range. So from this high to this low is my breaker block. So when price retraces into it, I'm looking for 5-minute entries. Also, we have this up close candle, which is a strong hourly minus OB in a downfall. So both things are aligning nicely. Now we will drop down to the 5-minute time frame. So when price tap this breaker and hourly OB, we drop down to the 5-minute time frame. At the 5-minute time frame, we get a SMT with NZDUSD right here. And if we have an SMT with NZDUSD, what the case is that this high might have will have taken out this high in NZDUSD. So this move right here becomes our breaker block for AUDUSD. You should understand it very well, guys. This is a breaker block. Why? Because the correlated pair of AUDUSD has taken out this high. So you can also consider that yes, AUDUSD has also taken out this high. And just imagine if AUDUSD had taken out this high, then what breaker would you be considering? It is this selling move which came, this big selling move which came, and this all is the internal move. Don't consider breaker blocks in any of these internal moves. This major move was the main selling move which came, which led to higher prices, and in NZDUSD prices went so high that they took out these highs. So this is a breaker block for me. As soon as price closes below a breaker block, I enter short. As simple as that. As soon as this candle right here closed below it, I enter short. My stop loss above the breaker block with the spread, which is minimal. And my targets are, you can see the 5-minute time frame. Yes, this is the 5-minute time frame. You can see a classic market maker buy model right here, market maker buy model, buy side curve, sell side curve. So my initial target is this low. Now you'll be saying this is around a 3.5 hour trade. Now you would also be finding unrealistic risk to reward forming in these trades. Now I will also show you, see, this is where if I would have traded this, right, this is where I would have booked. I will not look for anything more than this. This TP is where I would have booked 80% or even 100%. Alright, now we will see what this trade did after we book here. This is the quite extended time. Like this was the daily FVG IRL, which I said previously. You can see this daily FVG. Yes, this daily FVG IRL. After this ERL, what comes? This daily FVG. And price went so low that this daily FVG was also tapped. See, you can also hold these trades, but yeah, I don't recommend it. If you are getting a decent RR, at least a 3 RR at an immediate low. For us, that immediate low was this one, which we were getting. Then there is no need to hold the trade till the main higher time frame perspective. This is more than enough. If you are risking 1% in this trade and you will get a 3 to 3.5% gain in one trade, then it is more than enough, guys. Trust me, less is more. Alright, now example 2. Right. Example 2 is also an Australian AUDUSD daily time frame chart. You see, we traded this move. Now, as this internal range liquidity, which is our daily order block in FVG, has tapped, what we are expecting, higher prices towards this external range liquidity. As simple as that. Now, similarly, we will drop down to hourly time frame when this daily key level is tapped. Now, I will increase the speed, guys, because in the first example, I have explained you in detail. Now, the speed will be increased. So, cope up with it. This is the hourly time frame. When this daily key level is tapped, we have a breaker block. This was a buying move which happened before the final drop to the daily FVG. This buying move before the final drop is my breaker block. So I mark this zone out above when our candle closes above this high. I mark this zone out and I wait for my session to enter the trades. Quite simple. Now, when this first tap happened, we'll go down to the 5-minute chart now. So this is the 5-minute chart. This is the first tap that happened here. You see the time right here? Sorry, guys. Okay, just hold on for a second. Yes, you see the time right here. This entry formed between 20 to 21. So it was the Asian session. And I have given you the time where you have to enter the trade. Asian session is nowhere in it. Also, we have London session. So we wait for London session to come. We don't trade on this tap. And you can see, if you would have traded on this breaker block, yes, you see this classic breaker block, this selling move and then up move. If you would have traded on this breaker block, your stop loss would have been taken out in the London session. Now I waited for the London session. The London session digged deep into the breaker block, and the time window which I have given you guys, after 2:45, you can see that this entry formed around 3:30. I think so. Yes, around this. This entry formed around 4 o'clock. 4 o'clock, this entry formed. So this was the buying move which came before the final drop. And when price candle closes above this buying move, I enter long with my stop loss below the breaker. This is quite a simple entry. Now this is what my targets are. If I'm buying here, my initial target is this high. Alright. Now it doesn't mean that I will take out 80% profits at this high. Alright. I will take out 50% profit and bring my stop loss to break even. Now my second target is this high. Why this high? Because this dealing range, this whole sell side curve, 50% is at this high. Also, I said you can catch this whole move and get unrealistic risk to reward, but it doesn't matter. I am getting a good risk to reward at a 50% above the range liquidity pool. This high, which is resting above the 50%, I am getting a decent 4 risk to reward trade here. I will completely book my position here. I'm not looking for anything more for the day. Quite simple. Example 3, guys. This is GBPUSD daily chart. On the daily chart, we tapped daily FVG right here and we had a good rejection. So now we will be looking for shorts or H1 market maker sell models. Now I will drop down to the hourly time frame. Now this is the hourly time frame. Now you can see that the hourly time frame, there was no major breaker block formed here because this was a CV, and I don't consider this as a breaker block because this was a major sweep. So I would expect price to consolidate and then go higher, and then we can frame a trade. So you can see price consolidated, went higher. We had this sell side selling move and then a final buying move. So this selling move right here will be my breaker block. Price closed below it on the hourly time frame and this breaker block was confirmed. But you can see that this breaker block never gets tapped. This breaker block never gets tapped, not even in this up move. So I wait. I don't feel FOMO if price is going lower without giving me an entry, because I know that the price will not reach to the final target in just one go, right? It's not possible. A retracement will come and it will give me an entry, and it came. This high was a smart money SMT high with EURUSD. So when this SMT formed and this 1 hour candle closed and confirmed this SMT, I dropped down to the 5-minute time frame here to look for shorts. You can see the entry time 9 o'clock to 10:30 time, pure New York AM session, which is also in our time zone. We have this SMT, we have this 5-minute selling move which came before the final up move. You see this 5-minute selling move, these glow candles are going lower and then we go higher. So this is my breaker block. As soon as price closes below this breaker block, this candle right here closed below it, so I enter short. My stop loss above the breaker block. Quite simple entry, nothing changes. Breaker block, candle closes below the breaker block, entry, stop loss above the high. Okay, so this I have kept a quite bigger chart here. This is the DOL. I will show you what the DOL is. Yes, I have marked this DOL right here. These were the smooth lows, which was the immediate target if you are selling short here. But yes, it's quite simple that I am not going to hold my trade till this drawn liquidity, right? On this immediate drawn liquidity, this is the target one. I will book I'm getting around 3 RR here. I will book 80% of my position and rest I can leave runners, or I can book for a fixed RR. Like if I am getting a 5 RR or a 6 RR, then I will also book the runs which I have left. But you can see how efficiently price delivered till the final drawn liquidity of the daily lows. See guys, this is not random. You might feel that all these trades, all these high RRs are random. It's not random. Why? Because we are first of all looking at the daily time frame. If a daily key level has been tapped, then only we are dropping to the hourly time frame. Now, also after dropping to the hourly time frame, when the hourly key level is tapped, then we'd go down to the 5-minute time frame. And also in that 5-minute time frame, we have certain set of rules, like we trade in this time zone only. So when you have so many things aligning with each other, we have time frame alignment, we have time zoned entries, then your trade is gonna be a killer one. Trust me guys. Alright. Your trade will be a killer one. If you have guts to hold it, you can hold it, but I don't have guts. My psychology doesn't match with holding trades. I cannot stay silently. Like my mind will blow if I have a target and there is drawn liquidity and price comes this close to my drawn liquidity and goes higher. I will be completely mentally disturbed, which I don't want. Alright, so I book targets at this immediate target and can hold runners for a fixed RR about 5 or 6 RR, depending on the trade. Now the last example guys, example 4. This is USDCAD on the daily time frame. It is a unique example guys. I will share this unique concept with you. It's the USDCAD daily time frame. We have lows which are taken out, which is our external range liquidity. Our immediate target goes to this daily FVG or 50% of this range or these highs. But as we are not targeting these major targets, we are only targeting the low hanging fruit, so it doesn't matter to us. Now we have an hourly time frame chart right here. So you can see that this buying move came before this final drop and it was closed above, so this breaker block is confirmed. Now when price tapped this breaker block, right, this was the Asian session. When price tapped here, this was the Asian session, so there was no point of taking entry right here. And price continued lower without showing any respect to the breaker. But you can see this huge hourly FVG right here. This is the ending of the hourly FVG. Just notice how nicely the FVG gets completely filled to its end and then price moves higher. Remember this guys, when you have a very huge FVG, see these FVGs are small FVGs. You don't anticipate them getting fully filled. But when you have a very huge FVG like this one, this huge FVG, then you can anticipate that if price goes down deep enough and we get a rejection or we get an entry at the ending of the FVG like we have here, then you can completely trust it if it is forming in a good time zone aligning with your higher time frame bias. We'll drop down to the 5-minute time frame. You can see this was the final buying move which came before the last stop hunt. So this is our breaker block, this whole 3 candles, and when price closes above this breaker block, we enter long. This is the point where it closes above, we enter long here, or stop loss below the breaker. Quite simple entry, nothing changes. This is my initial target, target 1. If I am entering long here, this is the 15-minute. This is a market maker buy model. Market maker sell side of the curve, buy side of the curve. This is also having a staggering high risk to reward ratio. So in such scenarios, like see it will be around 6 R here at these highs. But I am not patient enough to hold 100% of my position till 6 R. If this scenario happens, I will book my position 50% or 80% at a fixed target of 1:4R somewhere here. Then I will leave the rest position for this final target. And you can see this trade, how it went. These are unrealistic target, guys. It does not happen every day, every time, every week. So you should look what you can get. All right. So this is it, guys. This was the final PPT. Thank you for listening. And if you stayed till here, I would like to thank you all to patiently listen to me. Thank you, guys. If you have any queries, feel free to ask me in the comment sections. I will surely reply you. And it's the same idea, guys. I will just quickly revise it for those who have stayed till here. Okay, hold on. Yep. We need a weekly planning business. For weekly planning, you should watch my weekly outlook videos. Time frame alignment, simple, daily H1 M5. Daily key level is tapped, H1 market structure shift, breaker block or SMT, and then we take entry at the M5. Now my M5 entry is also extremely simple. When a candle closes below my breaker block, I enter short with my stop loss above the breaker block. Time. We trade only the London session in the 2:45 to 4:45 p.m. EST and the 7 a.m. to 11:30 p.m. 11:30 a.m. EST in the NY session. Nothing more than this. Quite simple. Okay, guys. If you have stayed till here, thank you so much. And I thank you all. Thank you so much, guys.